Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, July 5th, 5:16 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. State of the market, we're in an uptrend 2 months now, going back to May 6th. Check the trend gauge over here. We've got the coveted four green arrows, leaders. Great for the most part. Some making halting progress, some taking 2 steps up, 1.5 step back, but staying above their 21-day moving average, which is a key indicator that we use. So we do have the yellow sub arrow there. Short term, 3 of the 5 major indexes above the short term 21-day moving average. Mid caps and small caps just cannot seem to get in gear. Thus the yellow sub arrow there. Same situation for the medium term 50-day moving average. Long term, all 5 of the major indexes trending above their 200-day moving average. Little reason to be concerned about the market, as long as if you take a longer term look at it, as long as you stay above the 200-day moving average, there's no chance of a bear market. All bear markets occur below the 200-day moving average. Typically, the way we play it is we'll stay engaged with the market, at least from a S&P 500 or index perspective, as long as that index is above the 200-day moving average. Individual names that we owned, we keep a much shorter leash on there, as the goal is to juice the gains when the market winds are at our back. And historically speaking, we know they're at our back when you're trending above these 3 time frame moving averages: the 21-day, the 50-day, and the 200-day. So what happened today? Closed about flat, chopped around for about 90 minutes, and then another nice trend up afternoon, third straight one in a row, taking the S&P 500 and the NASDAQ-100 to another all-time high close. Mid and small caps just never could get it going today, which has really been the story for quite a while now. Here are the final numbers. The 21 over 21 list for this week, up 0.5%, 12 up, 1 neutral, 8 down. The big 8 continues to just rock and roll. Despite NVIDIA being lower today, on average, the 8 up by 1.83%, led by Meta up 5.9%. There was a video, an AI-generated video of Zuck water skiing in a tuxedo, drinking a cocktail. And I don't know if that was enough to spark Meta today, but whatever it was, the stock was up 5.9%. The RG8, on the other hand, just barely negative, mixed bag there. And you'll frequently see that when mid and small caps are lower, such as they were today. S&P 500 ended up 0.5%, equal weight slightly negative on the day. The NASDAQ-100, well, if the big 8's up 1.83%, you can bet the NASDAQ-100 is going to be leading. It was up slightly more than 1%, equal weight up about 0.75%. Dow slightly positive, mid and small caps both lower on the day. Global 60/40 up 0.5%. Bonds and stocks contributing to this return as yields pulled back. Our flagship portfolio, GROTECTION, up 0.57%. Despite some drag and some trim by a couple of names. 3 trims today. We'll talk about the weeds that we partially pulled today as we get through the video. Let's get into it. Here's the S&P 500. And since this negative reversal, we had virtually no follow-up weakness after that. We undercut and reclaimed the 8-day moving average. And this was on Monday. The negative reversal was on Friday to close the quarter. And then the last 3 days, and we've been talking about how this first 2 weeks in July is a very bullish period. And I don't know if the algos were just turned on while people went on vacation this week, but there was afternoon buying consistently, and you can see the 3 higher closes, all 3 of them all-time highs. Take a look at a 15-minute chart here, and you can really get a perspective on the afternoon. Well, not afternoon for the day before the 4th of July as we closed early, but afternoon buying on Tuesday, morning buying on Wednesday, late morning and afternoon buying on Friday, which is today, after this negative reversal on last Friday, chopped around on Monday, and then the breakout on Tuesday. We've been drawing this line for a while. Let's draw it one more time. That 54.90 breakout level that failed twice, and the third time was a charm, continuing higher. Haven't tested it on any pullback. That is usually you like to back test a broken level to make sure that it holds, a broken resistance level to make sure that it holds. But we just took off to the races this time. Not going to argue with it. NASDAQ-100, really strong, same situation, undercut reclaim of the 8-day on Monday, up Tuesday, Wednesday, closed Thursday, up Friday to all-time highs. Can't complain about that in any way, shape, or form. Let's go to no matter who's complaining. I saw Dan Nathan. I actually I didn't see it. I saw somebody say this because I don't watch that garbage show on CNBC. The higher the markets go, the more bearish I get, is what he said. And if you don't laugh at that statement, I don't even really know what to say. Here's the Dow. Higher above the moving averages, forming a triangle here. Obviously, what the bulls want to see is this breakout, and really we need to clear this 40,000 level on the Dow. Let's go to mid caps. Mid cap index has been the weakest lately. This declining tops trend line has been staying intact, but we're coming down to the bottom of this support level. In fact, we're at the bottom of this support level. Terrible relative strength. This is oversold, looking for a bounce, and want to see some breadth. And then we're going to need the mid caps and the small caps to perform. So we attempted this breakout late last week, and we've been pulling back constantly, but we held it, but not today, breaking back below the 21 and the 50-day moving average. Just an ugly day. Relative strength line making new lows. Also, we trimmed half of our Russell long position that we bought above this move, on this move back above the 50 and the 21. One of these days, what we're going to see is money flowing out of these people just deciding that they want to take profits in these big tech names. And because there's so much money in there, if that money goes into small and mid caps, they are going to go on an epic run with massive relative strength, very similar to what we saw from November and December last year. They're just going to scream higher. We're going to take little dip toes in the water every time they poke above this level to see if this is the time when it's going to happen, because mark my word, it's going to happen. And we want to be involved with it when it happens, because it's a chance for some really big outperformance if you get on board at the right time. It's going to be choppy. It always is. Mid caps always have more volatility, but catching it at the right time and getting those gains early is the key to surviving any pullbacks. Those are the 5 major indexes. Let's look at the 2 equal weight indexes. RSP, back below. Never could really get back above the 50 and 21-day moving average this week, and you see that relative strength line terrible as well. When that rotation takes place that I mentioned, this relative strength on these RSP names, you can see how back in November and December when we outperformed, you'll see the same thing there. Just that'll be the ETF on the large cap side to buy as we rotate out of the big tech names. But for now, the big tech names are just where the money is flowing. When they asked Willie Sutton, bank robber, why he robbed banks, he said that's where the money is, because that's where the money is. And that's why we are focusing on these big cap tech names and riding them along with the index, because of their heavy weighting in the NASDAQ-100 and the S&P 500. There's equal weight. S&P, equal weight NASDAQ broke out. Cup and handle here. Attempted breakout, pulled back to the 21, but 3 days up now, along with the 3 days up in the NASDAQ 100. Some people use QQQE. That's a breakout as well. They're both just the equal weight NASDAQ 100, but you can see the relative weakness. Looking at a pattern without the relative strength line on the chart is you're only getting half of the information. All right, how about the dollar? Dollar 3-day pullback. This coincides with a 3-day rally in the market. Not really a surprise from my standpoint. And we broke this uptrend line on the dollar, and this has helped stocks this week. The VIX Close near the highs of the day. VIX up when the market is up is not normally is kind of surprising, but we hit this 12 level, which is a big support area for the VIX. On to precious metals. We'll start off with gold up 1.35%, second straight gap. Dollar weakness translating into strength in the metals. GDX, another gap up 2.8%. And SLV, which we own, second gap up 2.3%. On the other hand, Bitcoin is disappointing a lot of people, undercutting the lows of this base that it's forming. Now, is this the shakeout? You often undercut and reclaim of a recent low, gets rid of a bunch of the sellers and clears the way for higher prices. That makes today's low pretty critical on IBIT and Bitcoin. On to bonds, BND, the broad bond index, gapping up for the second day. Price gap up in bonds means price gap down or yield gap down. Here's TLT, 3 days up on that. Also, this corresponds to a 3-day pullback in yields. Here's the 30-year and finally the 10-year pulling back as well. So that's our inter-asset correlation. Let's go to the tail of the tape. You can pause this. The non-farm payroll report came out before the open. No major surprises there, but the unemployment rate did tick up, and a prior month number of jobs was revised lower. And as a result, the odds of a September rate cut rose slightly up to 77%. I think it's about 7% now for the upcoming meeting in July. But after that September meeting, up to 77% for now. Day count, third day up. Choppy base trend up into close. How about sectors? Software strong. XLCY, P&V, that's communication services. Consumer discretionary, staples, and healthcare to the downside. Banks and oils, and this is a big reason why small and mid caps were down. IYT is transports, aerospace and defense, builders, despite rates pulling back, and XRT retail. In-house, 3 stocks that we own, or tickers in this case, actually, a sector ETF, a index ETF, and a stock. Lagging since the buy, we trimmed half of the positions in all 3 of them, slightly reducing our exposure from a 1.42 to 1.36. Bottom line on the day, S&P 500, NASDAQ-100, third straight trend up day. The all-time highs, mid and small caps can't get out of their way. Let's go to the 21 over 21 list. We've actually got 23 in here because of 2 buys we made this week, and one of those buys, ARM Holdings. Hat tip to Ted and Connor for this one. ARM Holdings up 7.7% on the day, breaking out of a cup with high handle. We're going to go through these very quickly. I'm going to comment, and I want to get the weekly charts so you can see what's going on for more perspective there, and see in the upper corner how they did for the week. I'm not going to comment on it. I'm just going to get through this and wrap it up and let you start your weekend as well as me starting mine. Here's Meta. Remember, if it's got a green flag over here, we own it. Here's Meta. Clean breakout there with volume above average volume, despite the fact that it's on a Friday after a holiday, the July 4th holiday. Palantir kind of breaking out toward the top of this flat base now. Datadog, this has been a strong software stock. It came on our list this week, and for the week up 3.8%. Silver up 7% on the week. 2-day nice performance there. Apple, we own this, breaking to higher highs, up 7.5% on the week. Transmedics just keeps grinding higher. Eli Lilly, another one that keeps grinding higher. 2-day shakeout there, right back to all-time highs. CORZ, this is a former Bitcoin miner that is transforming their data center into an AI data center. It's a volatile one. Ted and Connor brought this one to my attention too. So we'll keeping the position small in an attempt to not get shaken out. Up 10.7% on the day, on the week, and that's about its ATR is around 10%. So this is not for the innocent. Bros continues to ride higher along the 8 EMA. Amazon holding up against that 200 level. Jeff Bezos announced that he's going to be selling a bunch of stock throughout the rest of the year. Coherent off the 8 data to new highs. Pinterest battled around the 21, but managed to survive it. I'm questioning whether to take this one off or not. I think there's probably better names. No relative strength since that gap up on earnings. CrowdStrike continues to go sideways after its addition to the S&P 500. Kava, it pulls back, bounces at support consistently, stays above the 80 EMA. Look at this ride up higher here on the weekly chart. This shows you how strong it's been. AppLovin, this was a new addition for this week, and what an ugly day this one had. Gap up at the open, ride to higher highs, and then just a rug pull. You can't spell crap without app. That's how that looks. Uber going sideways along the 8 and 21. We stopped out a half of this early this week. SARK, we're going to pull this off the list. ELF sitting right on the 21. Sarepta, probably going to pull this off because of relative weakness since the gap up. NVIDIA, tough day today after a very strong day on Wednesday, but volume was light. Abercrombie and Fitch, we trimmed half of this on a break below the 21. These retail and apparel shoe names that have been strong are just kind of taking a break now, and this fits into that, looking at other stocks in the sector and in the group, and it's hard to find one that's showing much strength. And NRGU, big reversal today. We trimmed out half of this also. When we take these triple ETFs, we're looking for a nice ride higher along the 8-day exponential moving average. We'll ride it until that changes, and it changed today. So we trimmed half of it, and the other half below today's low will get thrown out. And that's your 23 over 21, and not all of them are over the 21 anymore. So this one will get booted out as well. But that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. I'm on Twitter @dvandenbord. You can reach out to us via phone, 855-REAL-WEALTH. That's 855-732-5932. My partner, Dan Stewart, will answer that phone number if you're interested in becoming a client. He loves to talk financial, all things financial with people. One of the most knowledgeable finance people I have ever met. Happy to have him as my partner, no question about it. And reach out to us. Our flagship portfolio, as we detail every day, is named GROTECTION, as it's designed to grow assets during uptrends, pull back a little bit if things start to go sideways or pull back, and get the heck out of the way in bear markets such as 2022 and COVID. Key line is this black line, the 200-day moving average. All bear markets such as the one we saw all throughout 2022, they all happen below that level. But when we get back above it and the trend changes, we're going with that trend. It's like riding a wave. Ride it until the wave ends. And thus far, it has not, since, especially since November 1st of last year was when the big follow-through day happened. The tide turned, and we've been riding things higher ever since. Give us a shout if this makes sense to you. And with that, I'll wrap it for the week ending July 5th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great weekend.